Hi, welcome to the Market Alert for Thursday, the 18th of May 2023. So banks bounce again as massive short squeeze lifts stocks. Bonds are battered and the debt ceiling deal mission accomplished a little premature. I think that's alluding to a rumour that it's already in the bag. As I said before, it will be in the bag at some point, but I think this is just buying the rumour at the moment. It may be a different thing today where you sell the fact that it is not sorted, so we'll just have to wait and see. Stock surge on debt ceiling optimism. Well, there you go, it's just optimism. The deal isn't done. Regional banks recovery and retail earnings. Debt ceiling optimism strong. Wall deposit update and TGT and TJX not as bad as feared. Mixed housing data and average 20-year auction. So that's economic news. So yeah, and then again US stocks rallied amid optimism amongst regional banks and the debt ceiling talks. So it's all optimism, rumour, and moving the market higher on that basis, which is not unusual. You see that most days, don't we? Today we've got two bank holidays, Germany and the French. They're both going to be missing in action. And then monetary policy hearings for the UK at 10:15 a.m. and then over to the US at 1:30 and 3 p.m. for unemployment claims, fully fed manufacturing index and existing home sales. So let's have a look at the market, see what they did during yesterday and how they could play out today, and we'll kick off with the Dow as we normally do. So in the Dow, big move to the upside yesterday. As can be seen there, that's the end of the day picture up to the 50 EMA, which is where the market has stopped. And from this high down to yesterday's low, or the day before's low, you can see there we came up to 62% and also 50%. So we've got that 50 EMA and the market just ticking down a bit on the overnight there. So yesterday we saw the market move higher. We then saw the Dow open, saw the massive selling, then it was followed by buying. The selling disappeared. Not only did it disappear, but the market actually retraced there to 78%, bang on it, and then the market trading to the upside there on this so-called optimism. The market sideways at the moment, the high not far away at all, obviously, for this market, just above there. They're going to try and do whatever they can to keep the markets moving to the upside, and so expect the momentum to remain to the upside as long as it remains above the DP and the two averages in the 30-minute chart there. In the German DAX, a very interesting picture here. We managed yesterday to take out that high of 16,008, which has been bugging the market way back and since May the 2nd. We're now through this, so we should see the market continue to move to the upside. This is the monthly chart. We've looked at this numerous times as the market is heading through 89% retracement of 15,804, and the all-time high is only 16,298. Make that 16,300. And then if we have a look here, we can see we're not that far away at all. It's this BRN here and this luminous green line that I have drawn in on the 30-minute chart, so I can see where we are about to head to, and that's 300 points, and that's no big deal. Not necessarily in one day for the DAX. It does do that on the odd occasion, but the average move in the DAX is around 150 to 200 points on a good day. So a couple of days, nothing to stop the market getting through the all-time high. Once it gets to the all-time high, it may be a different ball game, but at the moment it's just bonkers that this market's even this high. But there you go. It is what it is. We've spoken many times about getting the markets back to the highs, keeping the illusion that everything's fine. I mean, let's face it, there's nothing going on in the world, is there? No wars, no inflation, no unrest or anything else that you can think of at the moment. Everything is fine and dandy looking at these markets. But that is the ability now with algorithms to manipulate prices and move them to the upside. It's nothing like the early days when I started trading way back in 94, 95 when we had recessions. The markets turned into bear markets and tanked. Those days are long gone, especially since the advent of 2008 with the QE money. Markets continue to make new highs despite the odd serious correction, but otherwise they continue to move to the upside unaffected by any serious selling, which is what we've seen over the last few months since October of 22. In the 30-minute DAX, we've already looked at this, and we just reset the chart. Again, we're already trading above yesterday's high, which you can see there. Germany's closed today. I don't know how that will affect the DAX when we kick off initially, so we'll just have to wait and see there. 5-minute chart for yesterday, we had the market moving higher to begin with, then we had the shakeout, where to? The low, and that was the last time the market saw yesterday's low, and then just continued to trade, as you'll see here, all the way to the high of the previous day. That was until the Dow opened, then we moved lower, but we didn't stay long on the downside, did we? We then came back up with the Dow with the Optimism. This is the Optimism move for the debt ceiling, the raising of the debt ceiling, and then overnight the market there just struggling a bit with holding above yesterday's high at the moment, but there is some demand around. Watch the close, because we've seen the market come off that twice, and also below this you will have the DP as well, which is just down there. Also note you've got the 200 MA at the 16,000 level as well. It is 16,000, yeah. So watch the 16,000 level, psychological level there, very important for this market. It might get a shakeout down to that level before prices then resume to the upside. Trades for the week, we've got 585 in profit, profit factor of 2.11, and win-loss ratio. I've ditched trades where they're not working out, so that's why there's a low win-loss ratio of 54 to 46. No big deal. As you can see, still making a profit. If something isn't working out, I'll get rid of it, take the hit, and then when it works out, I will then just let it run, which is why we have a profit for the week. And in the S&P 500, this also moving higher off that 50% retracement yesterday, trading up to 78-89% area. Market sideways overnight there, as you can see, sideways overnight, just below the high. Yesterday, again, the market trading up to the 200 MA, we see some selling coming in, and then we have a shakeout, 230, just as the real market opens, apart from the derivatives, and then the market trading sideways to higher overnight at the moment. In the FTSE 100, stuck in the sideways range at the moment. Let's just spread this out a bit, move it over so we can see what's going on. Market back down to 62.78 yesterday, and just sideways to higher overnight there. 30-minute chart, choppy session yesterday, coming off the low, up to the DP, retracement, back down through the low, but then we soon bring it back with the Dow in the afternoon, back to the DP. At a gap down overnight, need to stay above the DP and the close in order to move higher there. And in the currencies, GBP, JPY trading up to the 89% retracement in the daily chart, finding resistance there at the overnight at the moment. Big move yesterday to the upside, coming off the close and the DP, so a lot of support there. Market all the way up to this level, which was 172, and the market then putting in that high for yesterday, which you can see there. Nowhere near that at the moment. It's tried overnight, but so far has failed, and the market trading back towards the DP and the 50 EMA, where it will need to hold if prices are to move higher. In the pound, the market showing a bit of support yesterday, but a bit of weakness overnight. That's because the dollar continues to move higher, now on optimism, not on facts, but optimism, and the pound coming under a bit of pressure there on the overnight, which you can see there. But yesterday we started off on the downside. We traded down towards the S2 We had the retracement and then the market moving back to the upside, which you can see there, and to the DP, and failing to hold there. But at the moment the market trying to come back to the DP with some buying there at the moment. Dollar index continues to move to the upside yesterday as well, and overnight it's just pulled back a bit. It was on the high of the overnight, but has just pulled back in the last few minutes whilst recording this video. Right, let's have a look at the metals. So the metals continue to come under attack. As I said, $20 for me for the price of silver would be an area where they're likely to send it to. I can't see any other situation at the moment. We have got all of these other areas. I mean, we just keep breaking the supports though. We've already gone up to 26, we've broken 25, we've broken 24, and now we're heading lower, and I suspect we're going to break 23 today, which is going to be in this sort of area as they continue to take the opportunity to crush the price. Overnight already you can see that they're already doing this. Just need to take out yesterday's low, and that low you can see where they bought in at 23.54. 23.50 really below the low is going to be an interesting area, but I don't expect this to go up anytime soon, as they'll use this to their advantage while they're going through the debt ceiling, because that's a positive for the dollar, and it's an opportunity for those that are short in the banks, JP Morgan, Bank of America, etc., to hold those shorts and suppress the price. Again, just continue to do what they've done for a very long time. In the gold market, also being sent lower, now 1981, below that magical $2,000 an ounce. We know central banks are accumulating more than they've ever done. Any opportunity to crush the price, to buy the physical cheaper, they're going to take advantage of it, and they're buying in tons as well, so they're not going to be paying 1981 an ounce. There'll be some sort of a wholesale deal. So again, it'll just be interesting to see how far they can push the gold price to the downside as well. You can see again another day where they've moved it lower. Overnight they've moved it lower. Watch the low of 1974. I wouldn't be at all surprised if we don't go down to $1,800 an ounce on this with any sort of economic news or optimism of raising the debt ceiling. So there we go. Let's have a quick look at the gold-silver ratio, and once again you can see this starting to move higher overnight, and like I say, we're going a lot higher, probably the 90 area for this, and you can see there 83.80. We're already moving up on the overnight, so no surprise there whatsoever. Silver being crushed more than gold at the moment. Okay, that's it for this one. Let's see what happens today with Germany and France being closed, and also if there's more optimism with regards to the raising of the debt ceiling as opposed to facts. But there you go. A lot of market moves are based upon rumour as opposed to actual facts. That will do it for this one. As ever, thanks for watching. See you in the next one.